Hey everybody, welcome back. Well, we can see pretty clear right here that 5150 is still holding, but there are some movements here that are worth talking about. Let's pop in the simplest of indicators to start. You have a 2255 cross that's sitting here. The 12 is coming underneath. So there are signs here that we have issues. Now, if we look at something a little more simplistic, and we have a lot to go through that's not simplistic with what's going on with earnings tonight, some of the earnings announcements today, what's going on with Tesla, the bond market. There's a lot to cover here. So we're going to spend a lot of time on these issues. And I want to go broad, not so much deep, just so we're ready for tomorrow. But if we take a look at this, this is the 3, the 5, and the 8. And you can see how we're already lined up and curling up on the S&P futures market. And this move usually leads us a little bit higher. If I drop this back to the bear chart, and then just go back and put these private cloud systems in and drop it to an hourly, you'll see that we have been above the green since back here. And since being above the green and how this is playing out, you have a little yellow in here, the longer term cloud, you've just been grinding higher and higher, but you're starting to hit that level in here that we all just need to watch. And it's that real at 5150. And then from there, you have to work your way up and through all this. I'm not sure how easy that's going to be ahead of the Fed. So it's certainly something that we have to watch. But if you look, you should be able to see the demarcation lines and how you're breaking. For me, I think the best thing to do is just fan it out and look at the DTLs, meaning the downward trend line. So if I drop that here, that one's pretty obvious, right? You have 3 parts that are leaning there. You can see right in here how we broke, and even here, I think this is pretty clean, and how you came back and did the retest and then exploded to the upside. So I do think you're making some progress. The question becomes, are you going to make any real progress before you see what? Before the Fed meeting? I don't know. I don't have an answer to that. I can tell you that you are seeing some progress being made and earnings are helping. Someone could say left shoulder, head, right shoulder, and then you're going to break the neckline. But where are you going to get to before these monster earnings and before the Fed? I'm not sure you're going to get anywhere of consequence. So I think that's important for the next 2 days to realize before I get in and point out some of these things that are having massive moves, how you need to play them and what you need to do with them. So with that said, we should probably spend a moment and just look at the NQ and see what's going on there as well. And I like what I'm seeing from this standpoint. So we have these dojis here. We had it on the ES2, and you are breaking above them. Now, you didn't have to do that. You could have stayed in that area, but you're not staying in that area. You're breaking above them. So I think that's pertinent. But we have to understand that, yep, you are above the 12, but not the 22, and you have a 2255 cross here. So that means that the way I look at the world is, can we do swing trades? Yes, but the bears are still in charge because you're below the 22 and we don't have institutional support. To get super technical, I do get this technical, but if I look at the 55 and I leave the 55 here and watch that number, if I start coming over from this time, you can see the 55 was at 8209. If I come here, I'm at 18167. Well, that means I have a declining 55-day moving average. That doesn't make me feel warm and fuzzy about the NASDAQ at all. Now, what's going to get us out of this, if you watch Saturday's video, is probably not macro. It's probably fundamental, meaning i.e. earnings. And we had some great earnings come out tonight, which we're going to cover. And I think that's really important for us to look at. But for me, let's go to this one. For me, I want to cover some things that I see happening. For example, Bitcoin, you broke the 55, you hit a couple times, you can't get over that 55. I use a 12, a 22, and a 55. You should use what you're comfortable with. I say that because when you go through these charts, some people will say, well, your lines don't line up with mine. That's okay, as long as you're using what you're comfortable with. So you can see how this is setting up, and that's pretty much a problem. But we're not breaking down. We're not seeing that long bar down where we're having the follow through. We're just kind of here with these wicks. So we're not really breaking apart. Now, it's important for us to get this and understand where we are, because even the dollar has been pushing higher, and that usually puts pressure on U.S. equities, as we all know. But is it really doing that right now? And the answer is no. Now, you tried to rally through today, you got completely rejected, and you bounced off of that. So again, what are we doing? We take a look at the 10-year, right back to the high, and they bought bonds all day today. That's pretty interesting. We didn't really have great data today. You had the Dallas Fed, which basically came in line to a little weaker than expected, but nothing crazy there. And then we take a look at the VIX, which is just continuing to drop. So if we're looking at the equity markets, they're saying risk off, we're buying bonds, and we're selling the dollar. The exact opposite of what we're supposed to be hearing right now. And I think that's very important for us to note. So when we look at these charts, before we start jumping into it and go through some of these names, I think that's a very important distinction. And if we take a look at Now let's do it this way. So if we take a look at some of these indicators, this is S5TW. And what S5TW is this is stocks above the 20-day moving average. And what we noted was every time we got to this line, we would eventually see some kind of bounce. We went over this about a week ago, and I always like following up just so you can see. And when we got to this line, what have we seen? Well, we've bounced back up. Now, whether we stay up or roll back down, I don't have an answer, but this was pretty clean as far as an indicator. I think it was, and I think it's worth pointing out. And if we just kind of go through the list of them, yep, you basically went from oversold on the 5-day, where you were only 2% of names were above their 5-day moving average, to a couple days ago you were at a level on Wednesday where 87% were, and then you kind of backed off of that, right? Because these are short-term indicators, the 5-day, but they're great indicators on that level. If we look at the 50, you're really in that like milk toast area. I would rather have the flush down to where you had 6 or 7%. Only above that 50-day moving average, because that sets you up for a retest up here. And we're just not there yet. And if you take a look at the 200, you're not moving anywhere near off that level, which is actually pretty good if you just stayed up here and continued to push. But overall, what are we seeing? Well, we are seeing some movement in the sectors. And I think that's important, meaning, are we seeing buying coming in? And the answer is yes. Like XBI, people are getting excited because biotech didn't implode, but did it really go anywhere? Not really. And then you're starting to see people getting involved with the consumer. Now, I think this is interesting that the consumer XLY is back over. We are back over the 55 there, and I do find that interesting. I think utilities and the flight to safety continues. But why would you buy utilities? Why would you be buying bonds right now, which they are doing? Why are you buying real estate, which they are doing? This is a huge demarcation line for the XLRE, and we're holding in there. So when we start looking at this stuff, you really have to ask yourself those questions, and why was one of the most underperforming groups XLP today, even though we were broad-based rallying? You have a lot of like misnomers out there. Even look at, we keep hearing that this leads to huge stock market rallies, Dr. Copper, they call it. This is exploding. Copper's exploding. And so why is this exploding? And yet we're supposed to be believing that the economy's slowing down and we need rates to drop in order for the economy to keep going. Maybe the economy is just going to keep going because things are good. Are they? I mean, it depends on who you talk to and what TikTok video you watch, right? But when you look at this stuff, like here's the New York Stock Exchange, just the composite in and of itself. And when we look at this, technically, we're back above the 55. So we don't know that you're going to stay there. We don't, again, when we get back to the stool and we start looking at the macro and the fundamentals and the technicals, we don't know that we're going to stay here. But this is what we have right now. So it's very hard to play against that. Now, if we start looking at some of these names today and how they played out, for example, if we take a look at Apple clearly rejected that 55, which is a problem. And I got a lot of comments, and please keep commenting because it lets me know what type of content to put together. I got a lot of comments on patterns. So I want to show you a pattern that we did today where I did it live in the trading room and how we traded Apple and profited from it. So the biggest request that we got on Saturday's video, which, excuse the reverb as I set up the new office, but the biggest request I got was pattern recognition, and then how to utilize those patterns. So we're going to do more patterns, and then I'll put them somewhere in a file so that we can all watch them if you want to. But this was a very easy trade today. So let's say that you have good information, like positive information on your stock. And you can see that right here. Apple's going to do the AI, OpenAI. So we have good news, right? And it doesn't matter. You can do this for anything with good news or bad news, same way. So the easiest way to get in is immediately, but you don't know if you're going to roll or you're going to break. So these trades are called orb trades, and they are 1 minute. This one that we did is a 1 minute orb. Now, orb stands for opening range breakout. And they're very simple trades. You have a doji or some bar forms, and then you mark that level once that forms. And that is your opening range. Once that opening range is established, for example, that one's established, what they will do, the majority of people, they will go here and they will put their stop on here. So this will be the break from the opening range. And then from there, they'll execute right off of that. Okay, this is called an opening range breakout trade. It's a very easy trade to do. The probability of this trade working is really predicated upon the time frame. So the longer the time frame, the more volume, the more significant of the news. But let's stick with time frame for a second. So in other words, if this does that on a 5 minute, so if you have a 5 minute chart here and you get above that level, the opening range has a higher degree probability of working. The issue is you don't know where the stock is, but the higher the move, the greater the probability. What I like about opening ranges is to do them off the open, off the rip, and they either work or they don't. Or I'll do a 5 minute. Some people will wait an hour. They want that hour move, and then they're not going to capture a lot of it, but the probability is going to be right. So what we did here on this opening range was just buy it. As soon as it flipped, you had good news, and then it just kept on going, and it was exceptional. But these are really simple trades. Rule of thumb is if you break the low of that bar, you tend to at least test down here. Now, understand that these are very simple patterns that everybody knows. So if they know them, the algorithms know it. So the algorithms can trigger you. That doesn't mean that you don't get out. It just means that you might get back in again. So once again, it's an opening range breakout, or they call them orbs. This would be a 1 minute, because we did it off a 1 minute chart, opening range breakout. And all we're doing is when you flip, you're entering. That's it. And this was good news. You obviously had tons of volume. You don't really need any other indicators, quite frankly. You already know the volume is going to be through the roof. This becomes your stop. This is the squeeze, and it goes. Also, the larger the company, the more that you're probably going to follow the vein of the way that it goes. Meaning if it broke down for the short and then you flip it, that becomes the stop, right? The larger the company, because it's going to just take more money to move. Now with this, it was relatively simple, and I'll walk through the other part of it. All we had to do on a 1 minute chart was just watch it and keep moving any kind of stop up, major stop up to the low of the day. I like scaling out into support and resistance lines, depending if I'm long or short. So this was a major 1 hour move for us. I'll show you the move, and you can see these major levels here, and that's a major level right here. And once we got up to that major level, right, and then you look at that on a 1 minute chart, once we got up there, you could see the battleground. And that told us what we needed to do there. And I'm going to do these rough and unedited just because I have to for time's sake. And then you can see the double top, right? Wicks are price rejection, as we know. So what we did, and you're going to watch this live in a second, I'm going to show it live. Hopefully you'll watch it live. And because, technical analysis is so easy after the fact, isn't it? To just point at things and say, oh, no, you just buy here. But watching it live, you get to actually see what's going on. But the point of this is, at the end of the day, you're selling into the strength, positive slippage. You let it retest, tries, fails again. You can get out up here, or you can just wait for confirmation. And once you broke, that's it. You've established a resistance point, and you can see how we retested that resistance point. We couldn't get through it. So by the time this happens, if it's a day trade, you're out of the entire day trade, and you've made about $3. Here, watch it live. Apple's kind of interesting to me. I'm not going to lie. You're going to have to do almost like the 1 minute orb here, which is not a crazy bet if it flips here. Like if I can form that doji and then flip that doji, that might be worth trying. It's going to cost you, what's that, 173.13 if it doesn't go. But let's just watch that right here, because I think that has potential to actually lift here. And if it doesn't, you just get out of the way. Yep. So I'm going to do that right here. I'm going to buy Apple, and I'm just going to use that low as a stop. It's going to cost me 40 cents. I don't think there's much to do with that. I'm trying to stay in and see how it goes. But I do think that you can get a little bit of love there. So we're up to about 60 cents there. You could actually pull 60 cents out and then just use low a day as a stop. So you pull half out and then use low a day as a stop, and you can leave the rest on for the whole day. And just, if it takes it out, it takes it out. It's a free trade. And Apple's working out really well. We should be up $1 on that now. Apple made the most sense because it was down. To me, it wasn't like up the most. And that's pretty big news. And then you're going in the earnings as well. So, but once you start getting up there, you might just want to start cleaning house a little bit, but we'll see. You're holding like a beast here, guys. You're going to want to watch that level, that 55, and you're starting to see that rejection right there. And that was the level we talked about. So I'm going to trim into that level. So this is what we marked off. It probably goes back a little further, doesn't it? There we go. High of the day. Yay. Nothing for me to do there. Just leave it alone. We'll be up to $3 soon. So this is our level, and I'm just watching it for now. I haven't really gotten any big sell signals. I did sell into that, and then it shake and bake and went right back up. So let's just watch. So you're getting your first lower low here. So if I was just day trading it, I'd have to take that into account, and I'd have to trim more. Now I'm up so much that I'm willing to give it a little bit more leeway. But just for people that want to know, I'm down to about 50% of what I bought. I'm already down to about half. I'm down to a third on the Apple, and the rest is set at break even. The other thing you can do is just leave the rest at the low of the day, which is roughly 30 cents from where we're in at. And you have more than a free trade. No matter what happens, you'll make money. Either way, however you want to do it, it was a great trade. Now, I do get asked this a lot, when you're doing this live, how are you doing it? I'm typing nothing. people in the room are typing. So these are the timestamps for what I just went over with you so that you can actually see it as of today. And John just helps out and puts everything in there. So you can see the actual timestamps for when we actually did the trade. I think it's important to show that, but I do not type while I'm trading. I just do it live and show my screen, and then I talk. Sometimes I sing, but it is what it is. But there's the actual typing, and you can kind of go from there. It's going to be really interesting, actually, to see what happens with Apple here and some other names we should probably cover as well. But you're starting to see these lower highs and lower lows, right? And you have Buffett selling, and they keep giving you a reason why Buffett's selling, right? But when you really look at this, they're giving you a reason. Oh, it's for tax purposes. They ran a whole article in Forbes. That's why he sold. Okay. I don't know. I think you got some issues here, and you're having a real tough time with that 55. I use a 12, a 22, and a 55. You should use what you're comfortable with. But let's take a look at some other names. Earnings. I can't say it enough. They're going to be the driver. It's very clear, right? So semiconductor shares are trading higher. NXPI, so this is one of the big ones people were watching. And you look like you're going to see the 341. So they're raising their guidance. Roughly, but let's call it in line here on the rev. But the earnings side, they're setting us up. And overall, they beat what we were looking for. And then after hours, we're up about $10. Now, if you take a look at this after hours, you are trading higher, and you're just waiting for that conference call to begin. So I think that we're seeing some movement out there. Now, you have way more coming out tomorrow night with other names. And obviously, the big one's going to be SMCI and how that goes. But we're starting to see signs that this is not as bad as we expected. Even SMCI today. And I think that what you want to do is you want to watch price action more than anything right now, because you're under the gun, meaning you're under the 55. So life is very difficult here for traders. People are wondering why their trades aren't working as well. You're fighting the tape. Anytime you're below a 55, you've lost institutional support. So I'll say that again. Anytime you're below the 55, this is how I view the market. You've lost institutional support. So they're just sitting on the sidelines. I think that we saw the weekly volume, and you may have seen this already. Let me just show you this. But if you go take a look of the weekly volume, I'm wondering if they started to have a pretty much an oops moment, because the weekly volume, let me flip to that real quick. This was the second highest weekly volume that you've had all year. And it's the third highest in 6 months. So I'm wondering if they had an oops moment, meaning they sold and now they're wondering what they did, quite frankly, especially after ASML and Taiwan Semi shook everybody out. But again, if we take a look at something like SMCI, this is really difficult. So they're playing the game, and let me show you what I mean by the game. They're scaring the bejesus out of people. So in other words, they're just stepping away from bids. So all of a sudden, within 3 to 4 minutes, you're getting these drops. Now, this is great for traders that understand the game. We had some obscure data come out at 3 o'clock where everyone's going to be concerned about how much the government's spending all of a sudden, right? And so what they're going to do is they're just going to drive you down, and then they're going to bid them up. And so when you understand that they're going to drive them down and then they're going to bid them up, because they are looking for what? They're looking for supply of stock. There's demand. And you say, well, how do you know that there's demand? Well, what happened after they did this? Who buys into the close, right? It's institutions. I mean, there's actually performance-based solutions for the last hour of the day and oscillators and indicators towards the last hour of the day, because it is institutional buying. This is not rocket science. When you understand the games, you can take advantage of it. So this is another trade we did in the trading room today. And I'm pointing it out because it's important when I show these that you understand how to actually take what I'm showing and then apply it. I didn't really want to walk through 2 live examples today, so I'm not going to, just for time's sake. But if you want to see where the triggers were with this one, just comment below and I'll put it in tomorrow's video. For time's sake, we have too much to go over with MicroStrategy's, Tesla, and some other names. But this was a real simple trade. And all we did was take advantage of this, wait for the setup, which to me, I'll just say it's absolutely glaring. When it triggered, we got in. And then you did what you did with the end of the day. I just gave levels to get out. Do I think that this is over? Do I think that everything's rosy and that everything's great and we're all going to just YOLO forever? No, we're below the 55, so you have to have caution, right? And that's why you want to be and have a system. You do not want to be out there just high-fiving your bros. Like, you actually want to have a plan, all right? So when we see this and we see these earnings coming out, we have to pay attention to this, but we're starting to see signs that some of these earnings are good. And we saw that last week with Clack and some of these other names. That's up another $4 today. And they're buying the names that are beating and exceeding earnings. I can't stress that enough. Versus the names like Meta that basically 21 downgrades. And I kept hammering this on Saturday to you guys, like 21 downgrades of target prices. The chances of outweighing that is pretty staggering. And that's because of the free cash flow, just absolutely plummeting based upon their expenses. So they're going to go for the leaders, or the ones that they think can be the leaders. And I think that's a very important distinction. So tonight, what we saw with MicroStrategies, which is down about 100 points, is they came out and they're bleeding, and they're bleeding a lot more. Now, this is from the time before the conference call. And I don't know how the conference call is going to go, right? So I just be aware of that. And people would say, well, what does this have to do with anything? Well, if he's got less cash, okay, and this is what you have to wrap your heads around. If he has less cash, then he's got less cash to pay his debt. If he's got less cash to pay his debt, remember, Bitcoin does not pay his debt, right? The convertible bonds that he goes out there and issues pays his debt. So if the cash flow is down, the convertible bonds that he can issue become less or more expensive. Okay, that is how this is going to work. He's highly levered. You can't issue more debt at the same rate that you were able to issue debt if you don't have the cash flow. So he's going to have to explain this. And I think that, he refers to himself as a levered ETF, and we can lever it. And he actually did a whole interview on it. Sickly brilliant guy. I mean, I am shorted, but very, very smart man. And he had a slide that I'll show you that I thought was fascinating. Excuse me, that just popped over, but I don't really have time to play with this stuff tonight, because in between doing this, I'm actually still trading. But MicroStrategies outperformance since adoption of Bitcoin strategies. I just thought this was really interesting. So he started doing this in August 2020, right? And so you're almost 4 years into it. Since then, he's up 937% since he did it, and he's just outperforming everything. And I just thought it was pretty interesting to take a look at. So we can say anything that we want, but at the end of the day, now, does that mean it's going to stay here? No. Realistically, I don't think it should trade any more than where Bitcoin's at. And quite frankly, I think it should almost trade at a discount to Bitcoin for a couple of reasons, but I'm not going to get into all that now. I mean, remember, Bitcoin you can actually own and keep in cold storage. There's a reason for Bitcoin. You can't really go to Michael Saylor and say, give me my percentage of Bitcoin, right? The whole purpose of it is to have that in cold storage. I mean, even he says it, keep it in cold storage. So the fact that you're buying this and not doing that, we can go down that rabbit hole later. But I do think that this is really important and that this can move the market. Now, block, this is also something that I'm short. It's kind of interesting that it's not moving after hours, considering the fact that 7% of the ETF is MicroStrategies, but it's not for whatever reason, and that's okay. We'll see what it does tomorrow. It has not been the best short. It's been exhausting. It's just not working. But if you follow through on these names, you're going to have to watch tomorrow, because Coin clearly closed below the 55 ahead of earnings on Thursday. So, and it's probably not going to do too well if we see how MicroStrategies does today. If people start to unwind that whole thing could just become a can of worms. We should talk about NVDA and this close. These kinds of closes are really impressive. People love the long green candle, and so do I. More than that, I like these dragonflies. Now, it's not a super technical one because you're not at the absolute top, but when you get these dragonflies, that means you had rejection the whole way down. Whole way down, you had rejection of sellers. These flipping are usually more violent than when you have a long green candle, because that long green candle means that you didn't have rejection, you had sellers. And that's a very important distinction. Right here, they're saying all the sellers are dried up. Nobody wanted to sell anymore. Where this green bar, the fact that it's full means that you had sellers in there. They usually refer to the long green bar with no shadow as just, that's pretty strong. And it is, but this can be really violent. And the reason that they can be violent is because you did what? You got rid of the sellers. Now you have net buyers. Now, who knows by tomorrow morning who comes out with earnings? You have a lot of guys coming out with earnings tomorrow, but I think that's really important. Tesla, this is pretty impressive, the move. I played around with it a lot on both sides today. To me, the easiest trade, frankly, was just when it rallied up and everybody just, is high-fiving the bros and thinking that, it's going to go on forever. And all you're looking for is something very simple. I mean, you don't have to overcomplicate these trades. And you can see actually long where it made sense even pre-market. But when you get a reversal bar like that, I mean, it's a pretty easy trade, guys, because you took out the higher high, you reverse, the whole thing's red, right? So it's what they call like a Marbuzu black. But once you broke, that's it. I mean, you're literally putting the short on for here, whether you're doing calls or puts, doesn't really matter. You're going to want to follow this tomorrow, though, because this is the first time that you are above this level. And there's some really bullish comments out there where, Kathy Wood's out there talking about $7 or $8 trillion and everyone's going to be in a robo-taxi in the next 7 years. I'd be surprised to see one, quite frankly. I hold very little belief that robo-taxis are coming in the next 5 years. It's just my opinion. We'll see how this goes. But I don't believe it. But you're going to have to watch this level, but I don't believe a lot of things that happen. So you're going to want to watch this very, very carefully in here and see how it goes. I would also say that I think it's really fascinating that XLRE and utilities, I'm going to leave you with this, XLRE and utilities are actually rallying. And for them to rally ahead of the Fed meeting on Wednesday, it's pretty telling. And so is the fact that the 10-year actually rallied today. So do what you want with that. That's it.